Stay with me for the next 22 minutes. Reports are circulating today, January 2026, that screens inside multiple U.S. bank branches are now showing live IQD and VND exchange rates, and that simple flash of numbers could change how holders of Iraqi dinar and Vietnamese dong move, plan, and act. In this report-style script for the Iraqi Dinar News YouTube channel, we'll walk viewers through what's being seen, what it could mean, how institutions prepare for this kind of change, and practical steps currency holders should take now. Keep your notes ready. We'll cover important verification steps, how banks display and process rates, what compliance looks like, and what to expect from the next operational windows. If you hold IQD or VND, or you follow currency developments closely, this whole episode could matter to your decisions. The tone will stay calm and practical. We'll explain the technical parts without heavy jargon and give clear, simple guidance for viewers who want to be prepared rather than panicked. Watch closely, because this is the kind of development that turns speculation into operational steps, and will point out exactly what to look for to separate signal from noise. First, let's set the scene in plain language. What people are noticing on bank screens are live foreign exchange rate displays, the numbers banks show when they will buy or sell a foreign currency for dollars. Those displays are public-facing. They appear in branch lobbies, teller stations, or on bank kiosks where customers can see the current buy and sell prices. When a previously quiet currency begins to appear across many branches, it is a visible sign that banks have updated internal systems and are prepared to handle customer transactions for that currency. For holders of Iraqi dinar, IQD, and Vietnamese dong, VND, that visibility is emotionally powerful. It turns months of waiting and speculation into something tangible. But visibility alone is not a guarantee of a broad market change. It is a stage in the larger operational process. Screens update when systems receive verified pricing feeds and compliance checks are in place. So, while the sight of a rate is cause for attention, it should trigger methodical verification steps before any financial moves are made. Next, let's explain what it takes behind the scenes for a bank to show a foreign currency rate publicly. A bank must receive a reliable exchange feed, often from treasury partners, international settlement networks, or internal trading desks, and then route that rate through compliance and operational workflows. That means risk teams must sign off. Anti-money laundering systems must be ready to monitor higher value flows, and liquidity teams must ensure the bank can fund large exchanges without disrupting normal operations. Only after these layers are satisfied will a rate be published on public-facing screens. That is why seeing a new currency rate on many branches at once suggests coordinated technical readiness. The banks didn't flick a switch on a whim. They typically test across environments, verify settlement paths, and confirm reserve and liquidity positions. For currency holders, this is reassuring because the rate on the screen has likely passed a set of operational checks designed to prevent errors or fraud. Now, why would multiple banks coordinate updates at the same time? Large financial institutions use shared market data feeds and often follow global settlement cycles. When central banks or major liquidity providers change their own feeds or when a new contract appears in interbank systems, many banks receive that information within overlapping windows. Coordination can also be intentional. When multiple banks prepare to accept large cash-ins or support new redemption processes, they coordinate to avoid overwhelming any single institution and to maintain orderly market functioning. This synchronized readiness reduces the risk of technical glitches and ensures that a customer who acts at one branch isn't met with a different operational reality at another. For currency holders, synchronized bank updates can feel like momentum, but it's crucial to understand that synchronization is operational. It does not necessarily equal a formal national policy change or an official revaluation announced by a central bank. Let's talk about what this means for IQD holders in practical terms. If you hold physical notes or have claimable balances denominated in Iraqi dinar, the first and most important step is to verify through official bank customer service channels and documented procedures whether the bank will process your transaction in the same way it processes any foreign currency exchange. Expect banks to ask for identification, documentation proving lawful ownership of banknotes or accounts, and sometimes additional verification if the amount is large. If the rate you see is new or significantly different from historical ranges, banks will likely ask for extra internal approvals before completing large cash outs or wire transfers. That's normal. It's part of responsible risk management. So before any action, take clear photos of any displayed rates you see. Get reference numbers when you speak with bank staff and request written confirmation of any appointment, limit, or fee structure offered to you. These steps preserve your options and protect you from misunderstandings. For VND holders, the story has similar operational mechanics but different practical considerations. The Vietnamese dong is a currency heavily managed between domestic authorities and commercial banks, and it's one that many U.S. banks handle through correspondent banking relationships rather than direct in-branch cash operations. If you hold VND and you observe live VND rates on a bank screen, it likely indicates that correspondent paths and settlement mechanisms are active, and that the bank is prepared to process VND-related transactions, possibly through wire transfers, purchase of foreign currency accounts, or limited cash transactions by appointment. Again, expect identity verification, documentation, and possibly tiered processing approaches for larger amounts. For both IQD and VND holders, the presence of a rate is a step toward action. It is not the final step. Patience, verification, and careful documentation are your allies. Let's walk through the verification checklist every holder should complete before acting. First, don't rely solely on a screenshot. Speak to a bank representative, note the date and time of the displayed rate, and ask whether the rate applies to cash purchases, wire transfers, or both. Second, ask about fees, commissions, and limits. Some banks publish a headline rate but have separate fees that substantially change the net value you will receive. Third, request the bank's written policy for handling that currency, especially any rules for large volumes. Fourth, confirm how long the rate is guaranteed. Some banks provide only a brief window to lock a rate. Fifth, check whether the bank will accept large quantities of physical notes or if the process requires a pre-arranged cash-in through a treasury desk. These steps help avoid rush decisions and reduce the chance of being caught by ambiguous terms. Now let's talk appointments and logistics, because when rates go live, many banks move to appointment-based processing to manage demand. If you plan to bring currency to a branch, call ahead, ask the bank to reserve a time slot, and ask what documentation you must bring. Government-issued photo ID, proof of address, and any paperwork proving the lawful origin of the currency can be required. Some banks also require that high-value exchanges be cleared through their treasury desk and a central office rather than a retail branch. Expect staggered appointment windows and phased processing, where early appointments might be limited to smaller amounts, with larger volumes handled after additional verification. If a bank tells you a rate is valid only for walk-ins or that there is no limit, be cautious. Ask for written confirmation and consult the verification checklist above. Security and anti-fraud concerns increase significantly when once quiet currencies become visible in many branches. Expect banks to apply enhanced fraud detection for any transaction that falls outside normal patterns. That might include temporary holds on funds, step-up identity verification, or requests for documentation regarding the source of currency. These are not obstacles, they're safeguards to protect both you and the bank. If you are contacted by third parties claiming inside information or promising expedited processing for a fee, treat those offers as red flags. Banks will not ask customers to transfer funds to private intermediaries to complete a standard exchange. Transparent, audible steps are essential. Insist on them. Keep records of every conversation, timestamp screenshots, and written confirmations to protect yourself if disputes arise. Let's examine what these visible rate updates could mean for market psychology and secondary markets. When live rates appear on multiple bank screens, investor sentiment can shift rapidly. People who were waiting for a sign may interpret the display as validation and respond by moving money, contacting banks, or coordinating with brokers. That spike in demand can create short-term pressure on bank operations and on secondary market pricing. At the same time, because the updates are visible and immediate, social channels and forums will amplify the signals. That amplification can create a self-reinforcing loop. More people see the screens, more people inquire, and banks face heavier demand. This is why banks often phase appointments and why official announcements and clear guidance are crucial. Sensational reactions may produce temporary chaos, so measured verification and sensible planning are better strategies than chasing headlines. From a regulatory and legal perspective, banks must comply with both domestic U.S. rules and international settlement guidelines when processing foreign currency transactions. That means adherence to anti-money laundering standards, reporting thresholds, and know your customer obligations. For large sums, banks will require enhanced due diligence and may report certain transactions to relevant regulatory bodies if thresholds trigger reporting. This is a normal part of cross-border finance and is intended to ensure lawful flows. As a currency holder, be prepared for these steps. They protect the system and you. If you prefer to avoid delays, consider preparing documentation in advance. Legitimate proof of ownership, origin of funds, and bank account statements that match your stated intentions will reduce friction. Technical infrastructure is another piece of the puzzle. When a bank publishes a rate, it isn't just a display. It signifies that treasury systems, settlement feeds, and correspondent banking channels are connected and verified. Back-office reconciliation runs continuously to match customer requests with settlement instructions. The more complex the currency and the less common it is in U.S. retail operations, the more likely a bank will shift larger transactions to a central processing hub. If you're dealing with physical notes, the bank must also have procedures for counting, authenticating, and securely transporting the notes to vaults or central operations. These logistics time data, and banks may stagger their operational rollout to prevent bottlenecks and maintain a high level of accuracy. Now, let's consider realistic timelines and what to expect in the coming weeks. Seeing a rate on a screen can be a precursor to appointment windows, expanded teller capabilities, or limited pilot programs the bank runs to manage demand. Expect phase rollouts, initial windows for small amounts, followed by expanded windows as systems and staff prove they can handle volume. If large-scale national processing is planned, that usually follows after successful pilot runs and further verification from Treasury counterparts and correspondent banks. Watch for official customer notices from banks and for formal announcements from central authorities. Those announcements are the definitive confirmation of broader policy changes. Until those appear, treat bank screen updates as operational readiness signals. Important, but not necessarily an immediate guarantee of unlimited, unrestricted processing. Let's outline a step-by-step action plan for viewers who want to be prepared without risking mistakes. Step 1. Document what you see. Take dated screenshots and note branch locations. Step 2. Contact the bank's official customer service number, not social posts or third-party groups, and ask for written confirmation of the displayed rate, what services it covers, and what limits and fees apply. Step 3. Compile your documentation. ID, proof of ownership, and any supporting paperwork that explains how you obtained the currency. Step 4. Schedule an appointment if the bank recommends it, and ask for written expectations about timing and required funds. Step 5. If you're unsure, consult a trusted financial professional or attorney who understands cross-border currency and compliance. These steps keep you in control and reduce the chance of being rushed into poor choices. We also need to talk about common scams and misinformation that rise when screens flash rates. Bad actors prey on excitement by offering inside access, private converters, or urgent one-time-only windows for a fee. They may also claim official inside knowledge that is unverifiable. Remember, legitimate banks will not ask customers to send funds to third-party personal accounts or to pay unofficial intermediaries. If someone asks for fees or offers to guarantee faster processing outside bank channels, that's a major warning sign. Use the bank's official contact channels, verify claims in writing, and avoid any third-party offers that bypass standard banking procedures. If in doubt, pause and verify using the steps in the checklist. Practical paperwork advice: prepare originals and copies of government-issued photo ID, bank account statements, and any purchase receipts or documents that show you obtained the currency lawfully. If currency was inherited or gifted, try to obtain supporting probate paperwork or signed affidavits. If you're representing a business, bring corporate documentation and authorized signatory identifications. The smoother your paperwork, the faster bank processing is likely to go. Some banks also accept notarized affidavits to supplement evidence of lawful possession. Having professionally organized documentation reduces friction during compliance reviews. How should holders monitor developments after seeing a rate? Rely on official bank communications first, emails from your bank, customer portal notifications, or messages from your branch manager. Secondary sources such as social media posts, online forums, and videos can be useful for spotting trends, but they must be verified through official channels. Keep track of the date and time when screens were updated and note any changes. If you're watching multiple banks, maintain a simple log: bank name, branch location, displayed buy-sell rate, date, time, and bank contact person. That log is helpful if you need to reconcile discrepancies later or if you need to present evidence of what you observed. Let's explore a few plausible scenarios that could play out from these visible updates. Scenario 1. Pilot windows expand and banks gradually accept limited cash-ins and wire exchanges under strict verification. This produces orderly processing and ramping capacity. Scenario 2. Initial demand outstrips capacity, leading banks to temporarily limit amounts or prioritize certain account types. Expect tiered scheduling and clear communication on who gets processed first. Scenario 3. Official central bank announcements follow, confirming larger operational changes and enabling broader banking channels to open. That's a major turning point where the wider financial system adjusts. Each scenario requires a different response from holders, but in every case, the verification checklist and documentation preparedness are universally useful. Now let's talk about cross-border settlement and correspondent banking, because currencies like VND often require correspondent corridors. When a U.S. bank processes VND, it often does so through correspondent banks that maintain local access to Vietnamese clearing systems. That means the U.S. bank must coordinate settlement instructions, foreign exchange contracts, and sometimes pre-funded accounts to ensure timely settlement. Delays can occur if the corresponding corridor needs extra verification or if local market hours differ. For IQD, settlement mechanisms can vary depending on the bank's direct relationships and the liquidity providers it uses. These mechanics affect timing and available transaction types, so when you ask a bank what services are available, ask specifically whether the bank will do cash settlements, wire settlements, or both. For viewers wondering what this means for larger financial markets and macro effects, the answer is nuanced. Visible bank participation can influence sentiment and secondary trading. But unless there is a formal and widely recognized revaluation or central bank policy shift, the broader macro picture remains driven by fundamentals such as trade balances, monetary policy, and fiscal developments. Banks showing a rate is a material event for holders and for operational readiness, but it may or may not trigger immediate macroeconomic changes. Investors and holders should therefore treat these updates as operational signals that could precede larger developments, not as automatic market transformations. Patience, diligence, and reliance on official communications are again the watchwords. Before we close, let's give quick, plain language do's and don'ts to keep everyone safe. Do keep careful, time-stamped records of any live rates you see. Do contact banks via official phone numbers or secure customer portals. Do prepare proper documentation in advance. And do consult professionals for large transactions. Don't respond to third-party fast-track offers or requests for fees directed to private accounts. Don't accept verbal promises without written confirmations. Don't assume a visible rate means unlimited or immediate cash-out ability. Following these simple rules will protect you and help ensure a smoother path through whatever operational changes follow. Finally, what should viewers do right now while the story unfolds? First, remain calm and disciplined. Second, follow the verification checklist and document everything. Third, resist rumors and offers that seem too good to be true. Most of them are. Fourth, keep an eye on official bank communications and central authority announcements for final confirmation of broader policy changes. Fifth, if you decide to act, proceed deliberately and with professional advice when needed. This approach will help you turn a potentially historic moment into a well-managed, documented process that preserves your options and minimizes risk. To wrap up in plain language, seeing IQD and VND rates on U.S. bank screens is significant because it signals operational readiness and coordination among financial institutions. And it moves the conversation from speculation to verifiable steps. But visibility is only one part of a larger system. The real work, identity checks, settlement pads, liquidity verification, and documented bank procedures, happens in the background. If you hold these currencies, prepare your paperwork, verify using official bank channels, and document everything you observe. That way, when appointment windows open or further operational steps are announced, you will be ready to act calmly, safely, and confidently. Thank you for watching this detailed update. If you found this helpful, like and subscribe for clear, practical updates as this story develops. We'll keep breaking down the steps, explaining what banks mean when they publish rates, and showing how currency holders can prepare responsibly. Stay alert for official bank notices and central authority statements, and keep your documentation ready. We'll be back with follow-ups as more verified information becomes available. For now, verify, document, and act carefully.